Welcome to the Strong Source Commodity Podcast. We are your hosts, Martijn Bron and Alexander Sterk. Welcome everybody to another episode of the Strong Source Podcast. This episode, we have here from the other side of the ocean, Jason McDonald. Jason, at the moment, you're Director Procurement and Commodity Risk Management at Sara Lee Frozen Bakery. Super excited you're here. We, of course, already worked for some time together and discussed about commodities. And I think it's super interesting to have you here and discuss about all the commodities that you've touched over in your career, because I think also at Miscon America, you had completely different commodities again that you were touching on. And also from the America's point of view, with the global trade and everything that's happening, supply chain disruptions, I think it will be a lot of interesting comments that you can give. And of course, the first one that we ask everybody here, and nobody had an answer that he said, I love commodities and I do commodities already since my whole life and I wanted to be in commodities. How did you ended up in commodities? And please give yourself a good intro as well, Jason.
Yeah. Well, thank you. Thank you both very much. So like you said, my name is Jason McDonald, Director of Procurement and Commodity Risk Management for Sara Lee Frozen Bakery. And I think to your point, my path into this field was not at all a straight line. And again, I think to your point, and I think that's true of a lot of people who end up in procurement or in commodity or risk management, whatever it might be. Quite frankly, what drew me into this world is kind of the intersection of two things. And that's been my career this entire time. And that's, the commercial side, the relationship side of, I guess what you would say is traditional procurement. And then the underlying markets that drive those costs of the commercial side and traditional procurement. And I think most people in procurement stay on that contracting side, the supplier side, which I still do today. It's valuable work. But I personally, both personally and professionally, have always been more interested in the underlying and underlying what's going on in the commodity markets themselves, because that's ultimately where I think cost is made or lost, quite frankly. And, if you're not paying attention to what's going on in those underlying commodity markets, what's going on in corn, what's going on in cocoa, what's going on in edible oils, and you're showing up to that conversation without half the information you need, you're already starting off on a losing battle. And so in my current role here at Sara Lee Frozen Bakery, I oversee our entire ingredient procurement and risk management team across, quite frankly, all commodities, all categories. Those include, grains, edible oils, sweeteners, cocoa. You start getting into derivatives of those things. Liquid eggs, for example, we're a baking company. And so inherently eggs is a big part of our process, but not necessarily a traditional commodity, if you will. My focus ultimately is, at least for Sara Lee, is managing that exposure to commodity price volatility. And it's my attempt day to day is to manage that margin, manage that exposure to support the business. And genuinely, I find it energizing. Despite all the chaos that might come from it, I quite enjoy it. So that's a bit about me. I'm married, I've got one daughter, 2 dogs, been in Chicago my entire life. So
nice. So go Bears, I assume.
That's right. Go Bears.
Go Bears. There you go. Hey, but then what you said, you're already in that procurement and commodities your whole life. How has buying and procurement changed as a discipline? Has it become more sophisticated or has it become harder?
I would say yes to both of those to some extent. I think it's changed enormously in my career, particularly over the last, 5-6 years, certainly an inflection point there with the COVID pandemic. But when I started out in procurement, and again, it still is, it can be a largely transactional function. You issue those RFQs, you negotiate those contracts, you're managing those relationships, you're ensuring product gets to your destination on time. And that still matters. That's the foundation of what I do today and what traditionally procurement does. But I think what's shifted is the complexity of that environment. And I think commodity markets have become more volatile. I think just in general, supply chains have become more global and at times potentially more fragile. And as we've learned, as I mentioned, during the COVID pandemic and the years that followed, that volatility, at least from the job that I've held and the roles that I've held has not gone away. You continue to see regulatory pressure. You continue to have sustainability expectations. to varying levels. You're dealing with geopolitical risk occasionally on an hour by hour basis, it seems. And, these are all procurement variables that, were there historically, but seem to have escalated, I would say, and I think the skill set of a modern buyer should reflect that complexity. Quite frankly, you need those business and commercial instincts. Those don't go away. You need that negotiation capability that never goes away. But you need that financial literacy. You need that market intelligence, that ability to communicate. Quite frankly, which I think, although I mentioned here last, might be potentially the most important, and kind of translates those decisions or influences those decisions to leadership. And so I think, quite frankly, coming up, the practitioners that I respect the most are the ones that can sit in front of a senior leadership team member, explain, in my case, that commodity risk exposure, walk into a supplier meeting, build that relationship. And I think ultimately that creates value over time. And I think going from one end of that spectrum to another truly is a skill that you don't inherently learn in school or something formal.
Yeah. Yeah, because you said in the beginning already on eggs, for example, what is a very important product for you guys is, of course, your bakery company. Yep. And then you saw that due to the avian flu, the egg prices went through the roof, and then they came down again very hard. How can you manage that, right? How can you manage an ingredient that is also being infected by animal diseases, for example?
Yeah. I think for us, it's a great example of a very challenging category in risk management, which is a primary ingredient for us to make our product. We need that, no questions asked. But to your point, it's at least avian influenza, the issues that we have experienced. It's driven by a biological event, and it's not a market event or a market dynamic that you can inherently model or trade against. And so I think avian influenza, it doesn't inherently follow a seasonal curve. There is some seasonality to it to some extent, but it can occur at any time. And I think, it's essentially a supply shock on our system that can arrive without warning. And quite frankly, the honest answer is you can't directly hedge egg prices the way you could hedge, cocoa or corn or soybean oil, for example. And so what we do is manage that exposure, quite frankly, through our supply chain. And so there's three areas that we looked at. First is contract structure. We put significant effort into the way our agreements are written, specifically linking those agreements to feed costs, which is primarily corn and soybean meal, which are feeding the chickens to produce your product. And so when avian influenza had spot prices that ran to extreme levels, producers that were most exposed were the ones that were buying those pure spot prices and having issues with their volatility and managing their margin. And so having contract coverage, even if imperfect, quite frankly, I think matters most, specifically when it comes to eggs and that supply crisis that we all went through. The second thing to that would be the feed cost analysis. Like I mentioned, I spent a significant amount of time modeling, the price sensitivity of what the feedstock is doing to our product. And I think when you understand that relationship, you can actually get ahead of some of these issues. Not always, but you can get ahead of some of these issues. And so when a producer is coming to you and asking you for a price adjustment based on feed inflation that they're experiencing, I think it's a conversation you can walk into being more educated or having been more educated and can kind of flesh those numbers out more easily. And, for Sara Lee, the third for us that we evaluated and kind of keep in our back pocket, so to speak, is product reformulation. We looked at, and this is a longer term lever, so to speak. You cannot do this overnight. We won't do this overnight, but to better understand those finished goods where egg is significantly influencing their formulas, we performed exercises to evaluate where can we reduce that egg input, where can we put in an alternative or a substitute that isn't egg itself. So again, can't always quickly execute that, but those three tools, I think, were the best to guide us through the avian influenza crisis.
And what are alternatives for eggs? Because reformulation that happens in many other commodities. But I was curious, what is an alternative for egg?
Well, the first is, can we simply reduce it? Or do we need to have as much that we're buying in that product from a food science perspective? That was evaluated. We also have to have concerns about what's on the label. Certain percentage reduction or increase of any product would need to be reflected on the label. But some alternatives that we looked at were some fiber alternatives from various suppliers. I know you asked about eggs. We also looked at coca alternatives. I recall when the coca market was as high as it was, we performed the same exercise and looked at alternatives for coca that included pomegranate, which was quite interesting. But ultimately, the first thing we want to look at is, can we just simply reduce without impacting? We want to keep the egg. Egg is so fundamental, it's hard to duplicate. And even those alternatives that we looked at don't inherently do what an egg does naturally, although they do a very good job at it. The ultimate goal for us is to keep as much egg as possible, if possible.
Yeah, and different bird is not an alternative than chicken.
Goose.
I don't know.
No.
Hey,
No, it's not. Not in this case, no.
and so is the egg market only a spot physical market? Is that what it makes it difficult to hedge it, to manage the price risk?
Yes, it is. Although there's been work done to formalize that a bit more. We do not participate in that directly. But yes, primarily, at least here in the United States, you have your large egg companies and egg suppliers, but it is still extremely decentralized. You have farmers that feed into these larger company feedstock, but at the end of the day, these farmers are spread across the country. It may not make sense for us to buy from particular locations, but it is still, in my opinion, a very decentralized component, not as traditional, I think, of your edible oil companies or your processed grain companies, from my perspective. And so you're still dealing with, in an old school fashion, so to speak. You're still calling farmers or potentially talking to farmers and processors of this product. And yes, you might deal with large companies that are buying from those farmers. Sara Lee might talk to a large company that is buying from those farmers. But I still find that the connection from farmer to large company in eggs is a much shorter link than other commodities, in my experience, and at least here in the United States.
Okay, thank you. Hey, first, something about Sara Lee. So I knew the company only as Sara Lee. You refer to Frozen Bakery. Is that like a different company, or can you explain the audience a bit how that works?
Yeah, it is. It is a different company. In 2018, Sara Lee Frozen Bakery was purchased by private equity called Logan Company from Tyson, split into what we are today. And so, generally speaking, the best way to think about it is we do frozen goods, quite frankly. And so, if you're walking down your traditional grocery store aisle and you see a cheesecake in the freezer section, that's us. If you see your loaf of bread in the bread aisle, that is not us. And so, traditionally speaking, yes, we are frozen goods. Although our business is primarily focused on food service, of course, consumer retail is important as well. But that is the differentiating factor here is we split from Tyson in 2018 and have been operating as a standalone company ever since.
Okay, good. A quick one on Chicago. You said that you're from Chicago, right? The whole life.
Yes,
So,
yes. Yeah.
No, I went to Notre Dame in the summer of '96. And then we took our bikes from South Bend to Chicago. I didn't realize that Chicago in the summer is like Miami. It is fantastic.
With the beach.
It's on the lake. It's absolutely
It's beautiful.
Yeah, it's beautiful, yeah.
Yes.
So I really loved Chicago. And part of the onboarding program of Cargill, you visit Chicago again to visit the Chicago Board of Trade.
Yeah, you got to see me.
And that was my first, that was still open outcry. And the day I was there, the guy got a heart attack on the floor. And it was amazing. I thought all markets are going to close, but nothing closed. No, it was a very surreal environment. But as a student, did you know that the CBOT was there? And was it at all, did it have an impact on you? on
I knew,
commodities?
yeah, I knew it was there. I've seen it in movies. Of course, it's very famous in Batman. If you've ever seen The Dark Knight, you can see it was filmed right on that road. But yeah, no, if I'm being honest with you, it didn't influence me in my path where I got here today. I'm late to the game as far as the importance of the Chicago Board of Trade and its influence on markets. I know the history of course, of Chicago, particularly of meat and coming up in the 20s as far as what Chicago contributed to the world. But no, it didn't inform me or influence me as much. And I regret that, if I'm being quite honest with you. I'm late to the game in that. I love learning about that. I have plans to visit it. You can tour it today. It's kind of almost like a museum now. If you go, they've got great tours you can take. But anyway,
Yeah.
I'm glad you enjoyed your time here in Chicago, quite frankly. I'm biased, but I think it's a great city.
Yeah. So, I've worked more than 26 years in Cargill. And so we were on the other side of you. And I focused mostly on one commodity. So in my career, it was vegetable oil and it was cocoa. And I was always amazed when I spoke to people like you, how they would manage all those different commodities. Because for me, really deeply understanding the supply and demand dynamics and price discovery of these commodities, that was already a day job with a whole team.
Yeah.
And that is also how Cargill is organized, by commodity. So how do you manage to understand the dynamics of all these different commodities that you are responsible for?
I think it's a phenomenal question. I think for me personally, I quite frankly absorb myself in some of this stuff. Like I mentioned in the beginning, it's a genuine interest of mine, whether I did this job or not. I think it's something that I would always be interested in because I'm fascinated by markets itself. But quite frankly, there's only so much time in the day and almost only so much bandwidth you can contribute to something. And so for me, the focus has been trying to learn as much as I can. I have a great team behind me. I have great support for that. We utilize tools, of course, that help me stay in the loop, stay educated on this stuff. And so I think it's a little bit of everything there that helps me stay on top of numerous categories, numerous commodities, and kind of depending on the day, some might take over, one might take over my entire day or entire week or entire, going back to eggs and influenza, that consumed my time for quite a bit of time. And so I don't know that I have a great answer for you, if I'm being quite honest with you. I just kind of do it.
But now what we can do, because for the audience,
I guess that's all I got.
No, but what we can do is for the audience, and we have a lot of youngsters in the audience, and they are interested in a career in the fascinating industry, and they want to know not what is written on the website, but what do you do on a desk? And a simple example is like, okay, pick one of these commodities. You need to make an assessment on where the market is now, where it may go, and as you described in the beginning, the impact of that on the profitability of your company. Now, and you need to make a call in terms of timing and sizing. When do you buy? How much do you buy? Where on the curve, if there is a curve, there's not only a spot market, whether you hedge or not. And also what I always found fascinating with the people that manage, ingredients, what is the driver? Is it your budget? When you hit your budget, are you happy with that? Is it a certain market view? Or maybe it's an assessment of where your competitor is buying. So could you provide a bit more insights on, your day, the process of your analysis, and what drives your buying decisions? How do you do it?
Yeah, I think it's a combination of all those things, quite frankly. There are budgets set. We manage that the entire category of all the ingredients we buy down to the item level. We set a price on an annual basis, like all companies do. Of course, you want to meet that cost because that cost kind of trickles down into, or trickles up in some cases, depending on how you organize, into that finished good product. So that cost, you would of course love to maintain all year or beat. From my role, it is a combination of attempting to maintain that cost because it affects the profitability of the company, but it's also managing that risk. Markets are going up to, every single day. It's in my interest to not get caught and be exposed, even if I need to take coverage in a market that I'm not inherently a fan of because the price is high. But I'm reducing the risk because I've taken that coverage on behalf of our company, and therefore we'll have supply coming into our bakeries. I think, addressing the overall comment of young folks that might listen to this or want to break into procurement or in commodities. Yeah, I think having a genuine curiosity and a desire to learn about markets and the process side of procurement is, I think, fundamental, quite frankly. And I think you should learn to follow commodities in a similar way that you might follow equity markets and understand what's driving that supply and demand in the categories that you work in. I'd recommend to young individuals, to read broadly, expose yourself across economics and trade and just general market structure. And I think that intellectual curiosity separates practitioners that have long-lasting careers or build long-lasting careers and from people that just execute the process. Not that there's inherently anything wrong with either side of those, but you can sense that when you work with individuals that have that genuine curiosity. I truly hope that answers your question. If I didn't address the entire thing, please let me know. But apologies if I didn't.
No, but and then so to add on this, right? So you said you don't want to be called out on one specific commodity, right? So somehow you need to be notified. You need to be known if it's eggs or if it's cocoa or it's sugar or flour or anything. Do you have, let's say there is one coming up, doesn't matter, let's say it's sugar. Do you then have a specific standard process that you go into or people that you call, the market participants that you call that to know like, okay, hey, what to dive deeper into the process? Is there, basically a little process setup where you say, hey, now it's sugar, we have to do these 5 steps immediately? Or is it just every time super random?
We do. We do, as a company, we have a framework, we have a policy in place that we'd like to maintain a certain amount of coverage, whether that's months or volume, kind of depends on the product itself. Depending on the market, of course, I might not want to go out and take a year's worth of coverage in a high grain market because that's not in our interest. We might deviate from that policy depending on what is going on. In fact, we're doing that today, quite frankly, in grains, and the coverage has been maintained shorter typically than we might otherwise do because prices have been higher. So yes, those conversations do have at least for us, and I understand some companies are different, on a monthly basis of where are we at today? What's our risk appetite? How do we want to stay covered? Is there something going on that I'm not aware of in procurement on the commercial side of the business that might influence what we do or don't do? And, I meet with our senior executive team to not only inform them of, like I mentioned earlier, translate what is going on. They're not looking at the market day to day like I am. And so ultimately my job is to translate that, give them my perspective, seek their input for either those coverage decisions or risk appetite decisions. And formally that's done on a monthly basis. Although quite frankly, to a smaller extent, it's done on a day-to-day basis with either my direct boss or his boss to seek that input and guidance to ensure that, hey, this is what the business wants to take on or not take on.
Yeah. And so if you look at then, the management of the company and do you see there is a real interest in the world of commodities, and do you see that they also understand the world of commodities, or do you always have to really bring the knowledge to the table, or do you see that it's also shifting that management? Because that's what we see with quite some companies that due to the war, the COVID, due to supply chain disruptions and all this, the volatility in the final products is that the management becomes more and more involved into also the commodities of the business instead of only the branding and the sales side.
Yes, I do. I think that's certainly grown over the last, 5, 6, 7 years, the interest in the geopolitical risks of the world and its influence on commodity markets, particularly in consumer good companies. I think it's always been there. I think the magnifying glass has only increased, quite frankly. I think there is a growing understanding that procurement's input on the margin of our goods is significant, and depending on where you go, depending on what company you work for, that significance could be more or less. But it is a large factor in the finished good price of ultimately what we sell to consumers, and therefore our inputs, our decisions that we make or lack thereof will influence, margin, quite frankly.
Yeah. And so if you look at then also the relationship that you have, but towards the supply side more, towards the suppliers, the traders that you work with, producers, how do you see that relationship? How is that also evolving, that relationship in your view?
I think it's a relationship between equals, quite frankly. Sara Lee, we blend traditional procurement with commodity risk management. We're a lean team, and therefore that is blended. In some companies, that's two totally different functions. In many companies, it's two totally different functions. But for Sara Lee, it's a blended function where I think it's a relationship between equals. I think, the best supplier relationships, for example, and supply chain relationships are ones that both parties feel that they're getting something out of it and not just tolerating each other because they have to. And whether those relationships are between equals is a more complicated question. I think the reality is that information asymmetry is perhaps one of the biggest advantages a supplier or trader has over a procurement team. And, they're in the market day to day. They see the order flow. They understand the supply and demand dynamics in their specific category that they're living and breathing every single day. And I think that's a significant advantage that they have. But the way I think about leveling that playing field ultimately is through building genuine market knowledge. Like I mentioned, I think it's instead of relying on suppliers to tell you that, you're following actual commodity markets. You're understanding those underlying fundamentals that drive those costs within that category. And you're building those relationships. I also think there's real value in transparency on both sides. And I think that suppliers or peers that trust you will deal with you more fairly and tend to bring you better information and tend to bring you better options. And, if there's an emergency, you get put in front of the line, and that doesn't happen, on day one, it gets built there. And so I think the best outcomes have been from those that feel respected and buyers who have done their homework, quite frankly.
Yeah. What I also find interesting is the potential tension or alignment or misalignment between you and the marketing and sales teams. So, for example, you have marketing and sales, they're very excited about a new innovation or promotion.
Frozen cake.
And they line everything up, and then you say, shit. There's a problem in this with these ingredients. So I would certainly not advise you to do promotions on this. How does that work within the company?
I think what you described as a central tension that occurs day to day, not just at Sara Lee Frozen Bakery, but at any company like this. I think the honest answer is that oftentimes the manufacturer is absorbing the vast majority of that risk, and retailers, or in this case sales or marketing to those retailers, they have no appetite to take on ingredient price volatility and in their buying structures, and at times they have the scale to resist that, and so ultimately I think generally speaking, a common practice is that you commit to an annual price, and then a key component or several key components can change or move significantly against you on day one of that, quite frankly, but in month 3 of it, and therefore you're now carrying the exposure of the remainder of that exposure for the remainder of the agreement or the remainder of the time frame, and that's real margin destruction. And I think the way, not only internally but externally, that you defend against that, or that you work through that, is a combination of not only coverage strategy but contract structures. And I think for us, the other piece of that is demand forecasting. Our coverage strategy is only as good as the information that we're getting fed. and therefore taking coverage on. And so if your forecasting is significantly off, you're either overcovered or undercovered, and that carries risks and problems. And so I think both procurement and the commercial teams in this case have to work more together. They cannot be siloed. I know that's a common occurrence that these functions are siloed, but they have to work more tightly together than they often do in practice. It is a challenging thing to work through, if I'm being honest.
Is in the retail in the US just as common as in, for example, Europe, that you have to give a price for the whole year for your final goods that you produce? Because that's the insane part. Because in Europe, it happens a lot that you have to give a price for the whole year. But if you look at the ingredients, it's insane. Nobody wants to give a price for certain products for a whole year. So then, there is a complete mismatch between what the retailer wants for the end consumer and what actually the producer can manage on a risk. And somebody has to manage that risk, has to absorb the risk. Is that in the US as well?
Yes, and I'll be honest. I've not been in sales, so I'm not dealing with our customers all the time. But yes, in my experience, that is generally the practice, is usually a year. There's some different rules behind that, depending on if it's food service or retail, how often price changes can occur, when prices need to be notified, or price changes need to be notified. But yes, that is a very common practice and certainly difficult to manage.
Hey, can you say something about your building of what they call a high-performing team or winning team? So the culture that you try to establish, because that's also something that the youngsters that are listening to this want to understand. And so, what is the culture of a company? Why do you like working for Sara Lee? It's to a large extent the people you work with, culture, but could you describe a bit how you also as a team lead set up people for success?
I'll first start by saying that I truly enjoy what I do. It has its headaches. Everything has its headaches. Every company has its headaches, but I enjoy what I do every single day. My wife, quite frankly, makes fun of me for how much I enjoy it. And to that extent, when you have to go to work 40 hours a week, presumably full-time basis, it's important to be not only around individuals that you can work with, but you get along with, and that understand what the ultimate goal is that you're working towards. And Sara Lee Frozen Bakery has always built itself on every single individual, no matter your title, is to act as if this is your business, to act as if you are a business owner in this process, whatever your influence may be. And every influence is important, from my job to anyone else's job in any other department. That all contributes to the bottom line, quite frankly. So to that extent, our team is structured, as I mentioned earlier, to manage both your traditional strategic sourcing function and the commodity risk oversight, which I think for us in our scope of business, our size of business, is the right model and the right way to go about it. I think keeping those two disciplines connected, rather than siloed, is important in the sourcing decisions that we make, in the risk management decisions that we make, and informing one another how one influences the other. And I think that integration matters, because a coverage strategy, if it's disconnected from an actual supplier negotiation, then it's just a theory. It's not actually occurring. I hope that answers your question. That's how we structure it today. But yeah,
as you enjoy the work so much, and you have visibility of different commodities, have you ever considered to move to a trading company? So rather doing procurement, but do trading with potentially also financially a different upside profile.
It is of significant interest, and I'd be lying if I didn't say that hasn't crossed my mind. I do wonder at times, though, if I've missed that boat, so to speak. I don't know. I'm so far along in my procurement career, quite frankly, that I think I just have to keep going. But yes, I have thought of that. It is of high interest to me, just from an outsider looking in to some extent. But yes, would very much, I think, enjoy that quite a bit.
Are there certain people that you admire in the industry? So I can give you some examples of people that I admire, like Paul Tudor Jones or Stan Druckenmiller, these type of people. Huh? Are there any people that you feel like, yeah, I mean, I could listen and the Buffett and Munger, people that you could listen to and certain principles that these people use, that you apply it in your day-to-day work?
Well, if I turned my camera around right now, you'd see behind me that I've got a library and I've got 2 busts of Buffett and Munger that are sitting on a bar cart with my favorite bourbon. And so, yes, Buffett and Munger are 2 that it's a cliche, perhaps a cliche answer. How can you not be a fan of those 2 individuals? But yeah, I would point to them. You know, I suppose in the business world, so to speak, there's an individual that wrote a book who her book has influenced not necessarily commodities or procurement, but just my management style throughout my career. Her name is Claire Heath Johnson. She worked for Stripe and Google, but she wrote a book that was titled Scaling People. And that's, I keep it right here with numerous bookmarks throughout to reference. And so I would say that book and her logic in that book has influenced me quite a bit. So not a traditional answer to your question, I suppose, in terms of commodities or our industry, but
can you guys
influences nonetheless.
About Buffett and Munger? What's so special about these guys?
You go first, then I go.
Because Martijn, then we're a half hour in.
Well, I'll do shortly.
Sure. No. Fair enough. So one of the books, which is a popular book. So I'm not. This is again a common answer. Is the Almanac of Charlie Munger, and I think just his logic of investment theory and just general knowledge is something that I not only quite enjoy from an investing perspective, but if you go back and watch any YouTube video of interviews with them or their annual meeting, I quite enjoy just their how they speak and the way that they speak in general. I think despite their success, I find them to be very average individuals, and I enjoy that quite a bit. It speaks to me. And so I don't know, just over the years, reading him, listening to those that have spoken to them or learned from them as well is something that I've always enjoyed. I'm very curious to hear your response as well, though.
Yeah. So when you were looking for that word about how they spoke, I was thinking about their logic. So it's common sense and logic, not impacted by hypes or grifts. And so they're very down to earth. And when Buffett was asked, what do you look for in people? He said intelligence, energy, and integrity. And without the integrity, the first 2 are not relevant anymore. And that's also something that I have applied always when I was hiring people. And so it's so logical. And integrity and intelligence and energy is extremely important in the commodities business. And why is integrity so important? Because you're exposed to a lot of money in the sense that, you can do a contract with either a buyer or a seller and no one knows it. And you can put that, you can still write a contract and put it in the drawers. And in the origin countries where you travel, wherever I have traveled, you are exposed to certain temptations that you need to respond to. That's why all the large commodity trading companies, they do compliance refreshers and they do things about behavior. And I think the difference between Buffett and Munger is they represent the haute finance. But they are different than Wall Street. I think Buffett and Munger are very different than, for example, a guy like Larry Fink, who is a salesman. He will sell his own mother. He doesn't care as long as it generates fees for BlackRock. And that is very different with Buffett and Munger. I think they're honest. And so one of the best books that I read.
But coming to the 3 principles. If you look at intelligence, what do you mean with intelligence? Because we had one of our guests, right, was a very streetwise guy. didn't do the education was
Yeah. It doesn't necessarily have to do with education per se.
okay. So that
It can
exactly
100% can be streetwise.
Yeah, yeah.
That's why, for example, Trafigura, they have an apprentice program, which basically allows underprivileged people who are not going to the top universities in Switzerland or in the UK or in the US.
Yeah.
And they enable them to still, start.
So it's a broader principle that just somebody studied.
Intelligence can definitely be streetwise. And I have also interviewed PhDs, rocket scientists, who I felt lacked the intelligence to understand human behavior in markets. Because, and Jason, as you know, markets are driven by fear and greed. Now, and so, I think one of the great books I read was about Warren Buffett. It's like a combination of a lot of his annual reports from Berkshire. And so what you read in that book is not only how financial markets function, but also how you run a business, and how he looked at managers and the integrity or lack thereof of managers. Now, and they are very, very funny. They are very funny. Go to YouTube, you find countless really, really funny quotes from these guys. And yeah, how do you say that? Aspire them, or they inspire me. Yeah.
But then also, if you look at Warren Buffett, is that what was so? What do you take from him from these videos then?
That he has a very original, independent approach to everything. So, he's a billionaire, but he is still down to earth, and he has very simple views about living a good life, just like Munger had. And like I said, they are not salespeople. So one of the most important quotes from Warren Munger that I apply with so many things in life, in financial markets, but also privately, is give me the incentive and I give you the outcome. Munger simply lets you be curious or skeptical about anything people tell you, because you need to think for yourself, and you need to think, which is extremely important in commodity markets. Why is someone telling me this story? Why are they saying that the S&D in cocoa is tight? Do they say that because they truly believe it? Or do they say that because they want to sell something? Or because they want to get my response? So that is such a simple concept. But I use it everywhere. Also online, when people post things. I'm thinking, okay, what is the incentive of this person? And going again about Larry Fink, the head of BlackRock, the world's biggest asset manager. Why is he saying things? And in my mind, very often he's saying things to sell a financial product. But anyways, look.
Yeah.
So, but yeah, it's a coincidence, but also nice to hear that you're also a big fan of those two.
I am truly I am.
Hey, and yeah, so we can't skip that topic. It's on everyone's mind. To what extent are you applying AI in order to make your life easier at the moment in Sara Lee?
I'll say in my world, AI commonly will be used to refer to as avian influenza. And so oftentimes we have to ensure that we're talking about the correct AI here.
Okay.
But in this case, artificial intelligence, I think, so I'd say we're in the early stages of understanding from a procurement perspective, of understanding where it adds real value versus where it creates noise. Is it great at enabling me to write out an email to ensure I don't say something stupid and then correcting me? Sure, it's phenomenal. But I think where I think it's genuinely useful for me is probably recognizing, like patterns across large data sets. I think it's great at summarizing, data or market intelligence very quickly. And I think it's helped me in building are supporting, scenario analysis around price movement. It's, what does a dollar movement or a 10-cent movement in this market mean to our underlying finished goods? And so I think, for me, in my experience, where I'm probably more cautious, perhaps maybe more than most, I'm a supporter, I'm a user, I embrace it, but I also think that the individual using it still needs to have deep category specific knowledge, needs to still have good relationship judgment, and still needs to have common sense, quite frankly. And I think because those are areas where the practitioner experience still matters significantly. And I think AI will ultimately make procurement more effective. It already has, but I think teams will benefit most, or the teams that I should say, the teams that will benefit most are the ones that invest in building up individuals with genuine market knowledge and have those fundamentals in place before, rather than outsourcing their thinking on their behalf. So that's where we're at today. That's where I'm at today. And I think ultimately, though, it is a tool more than not, at least at this point.
Do you think that AI will do something with the volatility in the market for commodities?
That's an interesting question. I'll be honest, I've not thought about that. I mean, how can it not? Would be my answer. I don't know how.
If they would use AI, right, for their commodity part, right, say, should I buy now sugar? Should I wait with it? Whatever. It's like this vicious circle that could start going. Or do you think everybody, what you said as well, everybody should keep on thinking that's not, AI cannot help us with any of these decisions, but it can make certain processes faster, easier, more efficient. What do you think?
I think I sit in the middle, as someone that is not a trader. I suppose I can't necessarily speak to how it will help that world other than speculate. And again, of how can it not? It will be quicker than perhaps what the human brain is today to analyze all sorts of different scenarios and inputs to come to a decision. But what I do think it helps us with personally and professionally is just, like I said, deciphering large sets of information to help me get to a decision sooner. Now, I think making that decision or knowing that decision is the correct one or wrong one to make, AI cannot do. It does not have that experience or fundamental knowledge that the practitioner has and has built up for the course of his or her career. So that's where I think we're not quite there yet. I suppose we'll see.
Yeah.
Maybe I'm wrong. I'm curious of your input, quite frankly. What do you guys think?
Well, there's a couple of things. Yeah, I think AI is a good tool. Yeah. Okay. Fine. But there are also things that I'm concerned about. Is that in commodity trading, at least the way I have been educated always in Cargill, is to question everything and think for yourself. And referring to that incentive thing, but also on the trading desk, and I assume also with you have a lot of people who come with ideas, with gut feel, with okay, we need to buy this or sell that, or all kinds of ideas. And I've been trained in always to say, okay, but then explain to me, how does it actually work? Show me the numbers. How are we going to make money with this? Where do we send the invoice to, right? Because at the end of the day, the decisions need to be translated into a P&L. The worry I have with AI is that people assume that is the truth. And because it can also make them lazy, because it is so easy and it comes up with, at first instance, a very impressive answer. You may think, well, this is all fantastic, and you go away with that. While I think that's tricky, because I've always been taught not to trust the system and think for yourself, challenge everything. So I think the worry is AI is so impressive that people may be overwhelmed with it and think it's the truth, and may also become lazy. Okay, there's one thing. There's one worry. The other worry that I have is all these kind of stories that you read about agents buying for consumers, and then all integrated with Klarna. And you can imagine, right? You can set variables, but then you come at home, and then your agent has bought all kinds of nonsense via Klarna. But okay, maybe I'm exaggerating, but it's a bit like this idea that autonomous agents can do all kinds of things, and then translate that to trading. Look, last couple of years, algorithmic trading has really ballooned.
Yeah, but that is because they are sitting on a pile of data.
Yeah, true.
That ChatGPT or Claude doesn't have.
No, okay, but you first it was algorithmic execution, then it became algorithmic trading, and obviously people try to now apply artificial intelligence to trading. And you have Robinhood and these scammers from Coinbase that they are already trying to sell agentic trading for retail.
Yeah.
Now,
that's dangerous.
I think that's dangerous. And maybe in our commodity markets, you may get indeed AI agents who are trading. Now, I'm very curious how the regulators, so the SEC and the CFTC, are going to deal with this, because, what is the human oversight, and what happens in markets that are illiquid, and when you have these things are getting out of hand. And what we have seen recently with Anthropic, all of a sudden switching off a certain model, and the Europeans were shocked that happened right now. So I'm quite curious.
I think
of
as
all
well
those complications.
what will happen, because if everybody feeds in data, is that you get that the US doesn't want to use the models of the Chinese, other way around probably as well. Then Europe sits somewhere in the middle. And so then every region, big region, has their own kind of AI model. So then you have, it's feed by all local data providers. And then all the multinationals, they just buy in the best data that they can get, build a co-pilot, and then try to make good decisions or a good analysis with that data. That's, I think, what will happen. So because the US will never trust. And then you saw that the Chinese, they built a new Anthropic, I think within 4 or 6 months, something like that. And it's just also with the tokens is still a massive issue. And then we all talk about sustainability and all these kind of problems. But I can tell you that when you ask what is the weather going to be like next week in Spain, then it's far from a sustainable answer going via Claude to ask it. So I think people don't actually really understand it yet. And what we always see is that AI goes all the way from nothing to everything. We all go extreme with it. Now, that's fine. We learn and we test it. And then somewhere in the middle, it probably ends. But we'll see where it goes. But I don't think that anybody in commodities dares to make a decision on going long or short with grains or anything based on a model yet.
Hey, I would also like to dive, I don't know how much time we still have, but dive a little bit in one specific commodity. Because I think cocoa is a material exposure for you, right? With frozen desserts, I can imagine.
It is.
Yeah. No.
Yeah, we do. Yeah, we buy it. Yep.
Now, cocoa went through a massive disruption since 23, 24. That was the big one. Up. And then 25, 26, it went down, and now we're up again. But this is something which I found super interesting, because this was a period whereby in the beginning, a lot of the things that were really happening were perceived as, annual folklore. And I think a lot of FMCG companies were in denial. Now, you have experienced that. Could you share with us something about how you managed that situation where the price of cocoa beans quadrupled, and it had also a massive impact on the semi-finished products? How you dealt with it?
Yeah, I relate it, or I think of it as, The market curve itself is very similar, in my experience, to eggs and influenza, or because of avian influenza, just a complete skyrocket and then a complete fall down, although to your point, coming back up again as of late. But because it differs from eggs in this case, where, we can take those positions, you are insulated to some extent when those highs or when the market starts to climb. But of course, anything outside that coverage, you begin to pay for it. And so for us, yeah, honestly, it was a layered coverage approach. It was how can I insulate us as a company as much as I can, trying to take advantage as much as I can whenever a dip in the market would occur. Let's buy then, try to take advantage of that dip. We are not, our risk tolerance in my case is I am not chasing daily lows, attempting to get the low end of the range of that day or that month or that week, whatever it might be. We're first protecting the company itself and the margin as best as we can, but we're also protecting our supply. And so it's in our interest to layer that approach, reduce that impact as best you can, stay close with our suppliers, ensure that we have the best knowledge that we can. But that is how we dealt with it. That is how we got through it. To some extent, we're still dealing with it. We'll see what the market does here. But anyway, that is how we handled that.
And counterparty risk. So I have had a couple of times. I don't know. I think you're a bit more diplomatic than I am, but I had to be on the phone a couple of times saying to people, don't fuck with me, right? That you knew I bought something and they didn't deliver. And they said, no, I'm not defaulting. I'm delivering in 3 months, right? These type of things. The counterparty risk has been one of the most prominent risks the last couple of years. Now, could you share something how you dealt with that? Do you have a nose for someone calling or someone not picking up the phone or trying to do hanky-panky and things? And how do you deal with it? Because it was
unfortunate enough to deal with
such an extreme situation that sometimes you also need to help out the supplier if they're honest.
In our interactions, sure, the price isn't ideal. It's not what we budgeted for that year, but no, I can't say I've dealt with or had that experience, I should say.
Okay, good for you.
Now, that's not to say that I haven't dealt with challenging individuals, but no, I can't say I've had that experience.
But what do you think, Martijn, is the best way to go with that? If somebody tries to, or maybe, look, let's say they're not honest, right?
So that is, and we go back here to this integrity thing that we discussed. You're not going to fool me. If you have a problem, you need to tell me. I've been in a situation where I knew that if we would hold a certain counterparty to their contractual obligation, the company will go bankrupt. Now, is that in the interest of us? No. So what you do, you say, well, okay, you are a breach of contract, but what you are going to do, we're going to set up a scheme whereby you have 6 months' time to cover the financial loss that we are now incurring by your behavior. Now, that is something that you try to do. Because at the end of the day, in the commodities business, you need to think long term. And the next time you are in the difficult situation, and then you also expect them to help you out.
But with the size as a Cargill, it's almost not doable anymore that you guys are on the other side, right?
Well, look, there are definitely occasions, and I've experienced it myself in 2010 when the civil war was in Ivory Coast, that I needed to explain to FMCG companies that due to the blockade, the export ban out of Ivory Coast, that we couldn't deliver as per contractual obligations and that we needed to find workarounds, different recipes, different origins. And you learn these things that you are sometimes on the other side. And then you also need to ask your counterparties for help and understanding. But what is important, don't lie to me. If you have a problem, maybe the factory goes down. Or if your ship is delayed. Don't lie to me. But if you're honest, then we'll find a solution.
I think to that extent, and I believe I mentioned earlier, the real value to me in procurement is the transparency on both sides. And like you mentioned, when you're honest, when you're dealing with them fairly, you tend to get the better information. You tend to get better optionality. You tend to get preference when markets are difficult. And I believe that, when procurement professionals who treat every interaction as a zero-sum negotiation, they might win that individual battle, and they might win a few of those, but to the long-term extent, they will lose that relationship over time.
Yes.
And I think the best outcomes come from procurement practitioners and suppliers who feel respected.
Yes.
That will always win. I'm a firm believer of that.
Agreed. Well, with that, you have actually made this podcast to an amazing end. I really want to thank you for the openness and your really interesting and great answers to our questions, but also the story that you give about your life so far in commodities. I think this is a really cool story, and thanks for sharing that with us and the listeners.
Yeah, thanks a lot. I really enjoyed it, and I appreciate your openness.
Thank you, guys. Thank you both very much. Great to be here, and I truly appreciate your time.
Thank you.